somebody's facade of a businessman, let me speak directly. Somebody is laundering his money, and he wants you to come along.
Yeah.
And you'll be an unwilling and a naive partner, contributing to agenda that you know nothing about.
Absolutely.
And all these things come into play when, as they say, the tire hits the road.
Yeah.
So the motivation, entrepreneurs' motivation is very key, and always open your mind and know that not all businesses are set up for the sake of running business.
Today we are with Stephen Antwi-Asimeng. So Stephen has, a number of years of experience, notably through banking, private equity, and also as in governance of different organizations. So he started his career in corporate finance at EcoBank, and then followed through private equity and venture capital in one of the leading and probably one of the first private equity companies in Ghana, Fidelity Capital Partners, where he spent 15 years raising through the rank to become the managing director or senior partner. After that, he spent some time in banking at UMB, and then became COO of UT Bank, defunct UT Bank, and then CEO. After that, clearly, he really wanted to continue helping and investing in the ecosystem, and set up SAA Capital, his own shop, providing advisory in various capacities that we'll tell us a bit more about in a few minutes. And also, surprisingly actually to me, he's a licensed insolvency practitioner. That means that he can really dig into companies' books and really figure out things before they become insolvent or when they become insolvent. So again, Stephen, thank you for joining us today to start this first series of Titans of Investment Ghana series. Thank you, Stephen.
Thank you very much, Steve. I guess we can call ourselves Steve.
Yes,
Steve.
Yes, absolutely.
So, Steve, thanks for having me. Just one little clarification. I did start my banking before joining EcoBank.
Okay.
Actually, my first banking experience was with the National Investment Bank.
Wow. That's one of the earlier banks in the country. Yes.
Spent a couple of years before I moved out for graduate studies, and then joined EcoBank when I returned from studies.
Oh, okay. So you were actually one of the first returnees. We can even say we talk about repat, etc. You were first returnees many years ago. That's good to hear.
For me, it was always to go and get some knowledge and come back, and it would probably interest you to know that I came back literally a few days after handing over my thesis, and I had to hound people to bring me back.
I mean, it's a good spirit to have. Like, you wanted to come back, so essentially you made sure that happened the way you wanted. No, that's great. So again, we feel very, very honored to really have you here today to discuss, the incredible experience you have, and especially the opportunity to tell what this channel is about, Tales of an African CEO, tales of what is happening on the continent from our own perspective, and really providing that to the world and more broadly to Africans, I would say. So what I would want to do is, maybe before we dig into the challenging questions, I'd want you to, give us a bit of insight of, through all these experiences you've had, what was probably, the driver, but, why did you go from EcoBank to, Fidelity? Because sometimes it's about just meeting people, or sometimes really drive to do it. So I'm very curious to know a bit more about that, actually.
Well, you want my resume on camera. I will share some with you.
Yeah.
I was very clear in my mind what I wanted to do when I finished university. So yes, I wanted to work in the bank and banking system and the banking sector, and that is what found me in NIB. that's what we call NIB at the time. I note that there is now another NIB, which stands for National Intelligence Bureau.
Yes, which is not the same one.
So it is NIB, the bank. And there I did commercial banking. So I sat in the banking hall like all junior bankers. I opened bank accounts. I interacted with customers. I passed entries. And I did, actually in that time, I actually went to do, I was a little senior because I was already a graduate, and in our era, you had fewer graduates who were in the banking halls, but NIB was pioneering that in this commercial banking department. So I actually did go to what used to be the clearinghouse.
Yes.
The younger generations would not know. I mean, so the clearinghouse was a physical place where you went and exchanged checks and instruments from others. So I did that, and clearly I liked the experience, but I knew from the word go that that's not what I wanted to do. So I got the opportunity to study, and I stayed in banking. So I studied banking and finance from the University of Wales, and then joined EcoBank. EcoBank was closer to what I wanted to do because I did not go into the commercial banking side, and EcoBank at the time actually only operated as a merchant or investment bank. It didn't have branches at the time.
Oh, wow. Okay.
So I joined the team, and I was in the capital markets department, where we did a lot of transactions, privatizations, corporate finance, and investment banking transactions. Surprisingly, when the bank decided to go into a branch network, they wanted me to go to a branch, their first branch, and I said no. I mean, everyone from the CEO to all the senior executives, because I had some commercial banking experience, I was a natural go-to person, but I knew clearly that's not what I wanted to do. So it wasn't very easy, but in the end, management accepted my view, my position, that I wanted to do what I was doing. So I continued that for a few years and joined Fidelity. Fidelity was new, so it was actually from off the shelf. They had just got a license. EcoBank was a very well-known, although still in its infant years, but well-known bank and financial institutions. But I went to Fidelity together with a couple of friends, and literally went with a broom to tidy and sweep my office.
Oh, wow.
So maybe that was the youthfulness in me and the adventure. But I like what I was going to do, which was to now apply my skills, my knowledge and talent to work first in the fixed income area, which was more closer to banking. But I did that because I was also penciled in to do what became the Fidelity subsidiary, which was responsible for all these investment banking activities, and finally to do venture capital and private equity within. So that's what you call Fidelity Capital Partners. So I was there right from the beginning, and tried to help it grow into what it became.
Oh no, clearly you were a pioneer in that space, because to this day, I mean, there are not that many entities that have obviously merged and evolved, etc. But Fidelity is one of the names that a lot of people know in the investment industry in Ghana, and that has spun out so many other people in the ecosystem as well. So really, really happy to see you here. So, I mean, these are, vanilla things that we are talking about. I think one of the interesting part of, telling people about tales on the content is maybe stories, right? So throughout all this career, what beliefs have you held at the start of your career that you mentioned that you've completely changed your mind about?
A lot, and I must say I like the fact that you have called your series Tales. Tales is great. That means we're telling stories, and when we tell stories from our own perspectives based on our own experience, they tend to be real life, authentic stories. So I like that. And
Thank you. I
hopefully,
appreciate it.
I will contribute to the storytelling and the tales.
Yes, I hope so. I'm sure you will. I'm sure you will.
And I will start from this way. Now, if you are an investor or an investment banker, and you help companies or entrepreneurs to raise capital, you think that when people are looking for capital and they find that, they will be happy and they would approach the business with a partnership mentality. I found out much earlier in my career that that was not always the case, and that it's a very huge exercise in moral hazard. The entrepreneur knows what he wants. Sometimes you, the investor or the financial advisor, don't, or you think you do, but you don't know. I have, in my experience, found entrepreneurs, or quite a lot of them, particularly those in the SME space, that set up businesses not because they are looking only for capital, and that they want to do what businesses do to grow their business, expand, make money. Surprisingly, I have found people who set up businesses not for this. They set businesses up for different agendas. And I know you are smiling and laughing. Not every businessman wants to make money. A lot of people set their businesses up for their own egos. They want to be seen to be doing things. So they are big people. They have this business, they have that business, and they can match their external profile against the fact that they own businesses. So in one of my earlier years, I decided to be very inquisitive to try to understand what motivates a typical entrepreneur. Probably 50+% it is to set up businesses, but there's a good percentage that set up businesses for other reasons. And you need to find that to be successful at investing. Because if you don't find that, if you are unable to determine that successfully, you may end up either contributing to somebody's unholy agenda, somebody's facade of a businessman, and let me speak directly. Somebody is laundering his money, and he wants you to come along.
Yeah.
And you'll be an unwilling and a naive partner, contributing to agenda that you know nothing about.
Absolutely.
And all these things come into play when, as they say, the tire hits the road.
Yeah.
So the motivation, entrepreneurs' motivation is very key, and always open your mind and know that not all businesses are set up for the sake of running business.
Thank you very much for the insight. I think it just reminded me of one of the reports by the Collaborative Frontier Finance called the Missing Middles. And the Collaborative Frontier Finance has this division of the different type of entrepreneurs. So some of them are like dynamic entrepreneurs that really want to scale the company, etc. And some of them are just mom and pop, brick and mortar, lifestyle businesses. That just wants the name, the situation, the recognition, but not truly wanting to do anything substantial with their kind of company. And it's true, by questioning them, it's very important to determine that, I think. Yeah. So effectively what you're saying is that, at the beginning, you as an investor or a banker, when you were looking at an entrepreneur, you were thinking, oh, these people, they want to grow the company to make it big. But effectively, there's so many shades of those entrepreneurs, and more than half, unfortunately, are probably just lifestyle entrepreneurs. Right?
Absolutely.
Yeah, yes. Let me ask you a question related to that. I'm very curious to know from you, your point of view, which is, do you think there's a difference between men and women in this particular situation?
That's a good question. The brutal truth is that women in business, in our SME space, is fairly new. Yes, women have always been in business, but these were not businesses that the formal vehicles like PE or VC would follow. So they did their own businesses. I am aware, and I think I would subscribe to the notion that women they are more, should I say, honest. So most likely, if a woman is doing business, you will see less of what I described as the motivation. They're doing it for ego. They're doing it because they want to put a front behind before the business. But really, many times, when they are in business, they mean business.
Yeah. So that's a good segue to my next question, which is, we'll come back to this other one that we probably touch upon briefly, but what are the subconscious signals you look for when you meet those entrepreneurs beyond the usual paperwork, like investment documents, confidential memos and things?
Quite a few. In the first place, in the VC space, which is, I believe, what we're talking about. Mm-hmm. So I will use VC and PE interchangeably.
Sure.
So in this space, you are looking at entrepreneurs with a medium to long-term outlook. Mm-hmm. That means you are looking at partners. So the person who is sitting across you is going to be your partner for several years. It is more relationship, more long-term, and less transactional than other forms of financing. Okay. So the question is, can this be a true partner? Mm-hmm. You have many ways of testing it. We have your standard due diligence that we all do. And when I say due diligence of entrepreneurs, I mean it. I've followed people to funerals, I've followed them to churches, I've even followed a few to nightclubs.
Hey!
But that's because I want to see how that single individual behave in all these. But
wow, hold on a second. This is an incredible thought. I thought I was doing DD. I think you've taken it to another level. You go to funerals, weddings, events, clubs with prospective companies or that you want to invest, the management team or somebody in the team that you want to invest
Absolutely, and it's essential, especially if
if
it's an SME entrepreneur. Hey. We've all heard tales of entrepreneurs who don't make a distinction between their businesses
and their pockets.
And themselves.
Yes.
So if the director, as we usually call them, is bereaved, then the company is bereaved. Yeah. The company's checkbook goes to the funeral. The company's checkbook is going to the church and will be the chairperson or of the harvest
committee.
Yes. So you want to test this, and you do it very, very discreetly, but and carefully. And sometimes you learn a whole lot about individuals. And you can validate this when you now put your term sheet to the person. When you give him your draft agreement, you can see that the person likes everything except the fact that you want to share their boardroom, except the fact that you want to put some controls that would make her a proper entrepreneur. But she wants to be the business owner. And I'm using these two words carefully. They tend to be the same. Is the owner, but is a part owner. He or she is a part owner. But the owners exercise absolute control. Of resources, of people, and of what is called a business. And if you are not careful and you don't do these things, that becomes your risk points. Because it's now you are already in the business, your money is out there, and the person wants to behave like the sole proprietor when it comes to the company's resources, the company's affairs. Sometimes it's also a level of, and I use this word carefully, the level of, I say knowledge. Let me not use education because it may be misconstrued as formal education. But the level of awareness and sophistication comes into very sharp focus. You're talking to this person, and he sees you first as the one who is providing the bank. He sees you as his or her banker. That's not necessarily wrong because banks give money or bankers give money. And so it is your responsibility to ensure that he sees more than money, behind the interaction. And would he or she, as we say, play ball? Would she play fair? Would he agree to even some of the basic governance, corporate governance structures that you want to implement? And if he says that you would have a board, what is his or her idea of a board? And the fact that you may start from a position where their knowledge is very rudimentary doesn't stop the show, doesn't stop the discussion. It is a test that is where he or she will remain throughout. That means is looking for a financier, and maybe that road will be very, very long. There may still be very nice, positive things, but then it will show you what to do, show you even the instruments to deploy, because you cannot be a policeman, you can be a collaborator for a successful partnership.
Absolutely. I think the signs are there. Recently I had that's very same reflection where I realized that I had a hunch about something that the entrepreneur did. I chose to overlook it. 2 years down the road, it's biting me now. And the company is basically, I have to write off the company because of the behavior of the entrepreneur. And those signs, I saw them, but I chose to ignore them. And so that also happens sometimes where we see the signs, it's look, okay, are these people truthful? But
that's due diligence 101. If you have a gut feel, many times,
absolutely,
it does not mean that you stop the deal, but you have to give yourself a lot more assurances. So you have a gut feel, what should I do? Then it means that your due diligence has to be more nuanced to cover some of the soft things that we have.
Absolutely.
I'll give you an example. In one of my portfolio companies, and one of the greatest lessons that I have learned, I have learned many things, because I mean, if you do what I have done for that length of time, you come across many businesses, many people of different persuasions. And I don't want to blaspheme, but some of the difficult relationships that I have had, at least I can cite one and would keep the name to myself.
Please.
In future, the name would come in some form, maybe in a book or in a memoir. But this is somebody who was very well known and respected, and is a man of God.
Hey.
And it was a very important man of God with national responsibilities.
Wow.
And he comes to boardrooms and board meetings in clerical colors and all.
Hey.
And I found that there is no difference. In fact, that actually
Wasn't.
no, that should have been a flag. So naively, I thought, no, not much can go wrong with a pastor, a very revered pastor. But I was wrong.
Yes.
And that portfolio had to be written off completely. The company existed for a while, but only for himself. And he tried this on a couple others. Some of them were smart to come to me because they knew that we had made an investment, and obviously I gave very candid
feedback.
Views and feedback. So don't take anything for granted. Don't be deceived by the face, the appearance, and the status of the person, and also listen to your guts.
I agree. And I mean, I did do that in the past, but for some reason, I thought, look, okay, this one I can still go ahead because there's a great potential, but clearly I need to listen to my guts way more going forward. So I think it's a nice transition to talk about, one of the investments you may regret passing on that, and what it did teach you, that's number one. And the related question is, the moment in your career where you felt you had failed and how you rebuilt from it.
All right. So thank you, Steve. Obviously, you could not be in this industry for this long and not have these examples.
It's part of the process.
Regrets. I mean, if you are a PE person and you haven't passed on a deal that brings you eternal shame and embarrassment, then you haven't done your work well. So I have some, but if you can forgive me, I am putting together some memoirs, and I don't want to break the news here.
Nice.
Very soon. So watch out the space.
Nice.
And I have decided that I should share my experiences, just like we're trying to do here. So
excellent.
I do have some experiences, some lessons, but allow me to break it in a more conventional way when it's ready.
So tune in, Tales of an African CEO subscribers. Make sure you watch out for the next memoir from Stephen Antwi-Asimeng, where you learn a lot about successes and failures, I guess, and things you should have invested in that he wants to pass on. Thank you. So look, let's talk about a bit broader conversation, which is about Ghana, the investment landscape. So what do you think is holding Ghana's investment landscape from taking off really, even though I'm sure you've seen a lot of progress over the last 25 years? Sometimes me having traveled across the continent and beyond, when I see what's happening in South Africa, Kenya, Nigeria to some extent, and other places. I feel that, look, why don't we have a Ghanaian asset manager or bank at the scale of the access banks or the equity banks, etc., that have scaled across the continent? And so sometimes I feel that there must be something holding Ghana's investment ecosystem to scale, even within Ghana, but even beyond. Yeah.
You're right, Steve. I think there are a number of factors, and I don't pretend that I know all, but we've all asked ourselves questions. We've talked about Nigerian banks. At the height of its incorporation, our own Ghana Commercial Bank, GCB Bank, was probably one of the largest financial institutions in Africa.
Oh, wow, really?
And where are the bank's footprints? Precious little, to the best of my knowledge. They had a branch in Togo, which was...
Ghana Commercial Bank?
Yes.
Wow.
Set up a branch in Togo. And then they also had set up a branch or an office in London to facilitate trade, which is what is now Ghana International Bank. That was spun off during the privatization of the bank, which, by the way, I happen to be a part of.
Oh, okay.
So it was spun off. But that's pretty much what it is. Where are the titans?
Yes.
Why have we all always looked so inward? The first Nigerian bank, I believe, was started long after I had begun my career.
Wow.
So you won't have very, very old Nigerian banks, but they are all over the place now. And I think nearly all the top 5 or 6 Nigerian banks
are international.
International, of global stature. They are dominant in several markets, including Ghana.
Absolutely. Is it our risk aversion?
There's many reasons. I'll take regulation, and the easier thing is to blame regulators. That's not what I'm trying to do. But in Nigeria, they made a conscious decision that if you have to be a bank in Nigeria, you must be a Nigerian bank.
Yes.
So then you have no choice. Several years into that, they said, well, the bank is making so many windfall profits, and so then they have to plow back some of their profit into SME investments. They set up what they call SMICE.
Yes.
That required banks to set off 10%
of the dividends
of their pre-tax profits,
yes,
and invest them in SME. So you need to show evidence that you have invested 10% of your pre-tax profit in Nigerian SME business.
Yes.
And many of them responded by setting up banks, setting up funds.
Yes.
So many SME funds sprang up in Nigeria as a result of that. So I've talked about regulation. But it's also cultural. Between the typical entrepreneur in Nigeria and your typical Ghanaian SME, it is my experience that our people tend to be happy and satisfied with small.
Lifestyle.
You have used the word small businesses because we like what we can control. We like what we can have our hands around. Because we are so domineering and we are so reclusive, we're fine with small business rather than large business.
Because then if it's large, you have to open the books,
You have to
open so
open the
many
books.
things.
You have a bank that is in London, that is in New York, that is in South Africa. You have to open your book to all these regulators. So a bit of it is cultural, but I believe it's reinforced also by the regulation or lack of it. I travel to Ethiopia quite a bit these days because of what I'm doing with the group. And in Ethiopia, a lot of the banks, in fact, the law was that, I mean, all the banks have to be Ethiopian banks.
Yeah.
Telcos have to be
Ethiopian telcos, Ethio Telecom, for instance.
They
Yes.
have only recently begun to relax.
Yeah.
So Safaricom has joined. Even a couple of Nigerian banks are looking at the market. So regulation has a play, and also the cultural nuances and differences of the people. Their risk averseness or the lack of it, how much risk one takes or one is prepared to take, is itself partly explained culturally, and then perhaps not only in business. If I may digress a little bit, look at your typical Ghanaian footballer. The Ghanaian footballer went to Europe and he got $10,000 a week. And as we say here, bring $10,000 or 10,000 pounds a week here, is a millionaire.
Yes.
A Nigerian footballer, that's not enough. Why can't they also get 200,000? So it's probably also a mindset, which once again is another way of saying there are some cultural influences in that.
But I think a few Ghanaian companies, I feel, have kind of broken that mold. I'll mention one, which is, the name is escaping me, because I was in Nairobi and I saw a massive truck. They started in waste collection, garbage, etc. in Ghana. Zoom Lion, exactly. Yeah. I saw Zoom Lion trucks and things like that in Kenya, South Africa,
I've seen them.
Yeah.
Yes.
And so
I've
Zoom
seen
Lion
them in
is
Liberia.
Exactly. So it's one of the few Ghanaian companies that I see internationally within Africa doing big things. But Zoom Lions is a massive conglomerate of how many companies? Again, 40 companies controlled. Again, so I don't know if he's ever raised capital from outside. I don't think so. I've never heard.
I am not aware, but let me just track back and make a clarification, because on social media, some of these can be misconstrued and can become the object of slaughter. So what we're saying is in relative terms.
Absolutely.
We've got Ghanaian footballers who are among the best and perhaps earn more.
Yeah.
We've got a few Ghanaian businesses that are also doing well in, but the question is, we take the lead in many areas and concede that, and then come back into our own and recoil. So that's the point I was making.
Absolutely.
I was not making the point that Ghanaian businesses don't.
Yeah, no, they do, they do. But I think it's just the proportion. Sometimes people, even from East Africa, people think Ghana has a border with Nigeria, which always makes me laugh, right? Because they always associate us with Nigeria, which is great in a way. We are kind of cousins anyway. But still, there are two other countries in between. Yeah. And on top of that, what we would say is that culturally there's similarities, but a lot of differences, right?
Yes.
And so I think all of those things help other people to understand the continent better. And I think one of the things that I retain from what you're saying is that, and that's something I've seen over the last however many years, is that there's cultural differences. One being notably about the appetite for risk and the willingness to scale and take risk to do so. I think that's one of the things that, in a way, if we can drive more entrepreneurship, and hopefully this year the Startup Bill or Startup Act in Ghana will be passed. I'm really, really keen on that. And the GIPC law also will be modified to help more investment come to Ghana. Risk capital, even locally, but internationally as well. Yeah.
We have to be more audacious.
Absolutely. We need to take the bolder steps in a way. Yes. So maybe talking about Ghana again, what do you think is the most misunderstood thing about being an investor in Ghana?
Oh, quite a lot. I think I've said some of them already.
Indeed. Yes.
The first part is that you are a provider of money, and that's all you
capital.
For.
Yes.
So give me your money, allow me to
run my thing. I don't want you to be over my shoulders, eh?
Yes. Maybe some of this maybe, I'm not justifying, we may explain, because those of us in the space also have to up our game. I believe for the entrepreneur to take you serious, he must trust you.
Yeah.
That means when he speaks to you, he must hear that he is speaking to somebody with
competence,
good domain experience,
yeah,
and that he or she can benefit from you, from your experience, because you bring so many other things together. Otherwise, you will still be seen as maybe another type of bank.
Yeah, that's it.
And so give me your money and
let me do my job.
Let me do my things.
Yeah.
I think that we also have cultural baggages and legacies. And I think we've talked about this. I will not double down on that. Yeah. We are also not immune to, for want of a better word, let me say, bad things.
Yes.
I've seen and heard tales of people who have trusted themselves and gone into business and have been let down by people that they trusted.
Absolutely.
So these are friends, these are investors, both personal investors and institutional investors. And I can tell you of a very sorry example of somebody who talked to an investment banking firm and got advice, got his business plan, his pitch deck and all of that. And that was to set up, sadly, a bank. And the last thing he heard about that interaction was that there was a bank operating in the country. They even forgot to change the name and the logo. So these things undermine confidence.
Absolutely.
And so then when people go through this, next time they are talking to you or talking to another investor or an investment banking firm or an investment firm, they take whatever you say in a bag of salt.
Yeah.
So it casts both ways. Our cultural nuances and baggages, our own lack of glory in our dealings with some entrepreneurs, and of course the fact that we like small things. We're not very audacious.
Yeah, I think that's a conversation we can have extensively so far. But let's turn to something hopefully more positive, right? What has been the most impressive or corporate person you've ever met, and why? Why do you think they're impressive? Like an entrepreneur, a director, as you said earlier.
Yep, I have quite a few, but I will give out one, and I don't have his and their permission, but I hope that I don't incur the wrath. But I interacted with this gentleman. Unfortunately, he is deceased.
Oh, really?
Yes.
Oh.
I'm sure you know the company or the family behind the Fiesta Royal
Yes,
Hotel.
yes, absolutely, yes.
And this gentleman was leading. It's a family business, but you would be impressed just simply talking to him. That's because they have clarity on what it is that they want to do. They are professional in their approach. To the best of my knowledge and understanding, when I interacted with him, he was scrupulously honest, and he had vision, and he was willing to listen and engage. He had taken time to understand their business and talks to investors and funds and managers with a lot of respect, but also trying to show that yes, indeed, I am the partner you are looking for. And that's that's the dream of any PE or VC person, especially in a market where we've talked a lot about the frustrations of culture, of openness, transparency, or the lack of it.
No,
and they have taken their time to understand many of the problems that family businesses like them had suffered.
Yes.
Which is
Succession,
why they would not go beyond the first or at most the second generation.
Yes.
And he can, if you listen to Maxwell, may his soul rest in peace, he would give you a good lecture of why. And I will save the names, but some of them are very well known in our country.
Absolutely.
Which should have been among the largest conglomerates in Africa, but they are nowhere because of family issues, because of lack of succession. So in this particular instance with him, I had actually also brought in a Pan-African fund, and all of us were falling over ourselves. In the end, we did not do the deal.
Oh, wow.
But I speak so glowingly because he died.
Yes.
And,
then the thing
and it's not because he died, it's because after his passing, the family thought that they needed some time to re-strategize.
Okay.
But
which is understandable.
But all the important things that we wanted to do, the project that was being developed or was going to be developed with some of the funding from us and from the partners that we had brought on the table. He went ahead and did nearly all of them. You would see Fiesta residences.
Yes. So he did that without your funding?
Yes.
Oh, on his own capital?
On their own capital.
Wow, impressive.
Yes. So for me, it's one of the best examples of local entrepreneurs who demonstrate that they can hold their own. They can be trusted with people's money, and even when the leader was no more, I still maintain my relationship with the family.
This is great. I really like that, and I think it's a good segue to the next question, which is, what advice do you give most often to corporate leaders or directors that they tend to ignore?
It's many. So you always would. I'm sure this is universal. When we all say, those of us who are funding businesses. And remember, many of us do this with institutional capital.
Correct.
So the person has started his business, and here you are, the Harvard man, telling him what to do. It needs some effort to look and sound credible. And even though not heeding the advice has consequences which you can show and draw to them, it's difficult to get people to think that 100% of 10 is 10. And 10% of 1,000 is more than 10.
Yeah.
And what does it take to grow the business to 10,000? Because there's some allure of owning and being your own master, rather than sharing your boardroom, sharing your management, sharing your business plan. And as we have just said, some of them have faced risk. They share plans that they find being executed by others.
Yeah.
Okay. So I always like to be fair in an assessment that yes, there's a reason, but there's a lot more to be gained, and a lot more successes have been achieved by those who have opened up, than those who, have the
blinds on,
the excuse that X did it and suffered. Maybe he also knows that 15 X's have done it and gained, but it's natural, and you need to get people out of that shell to see that you are the ultimate beneficiary. After all, when PE or VC funds invest, the only time they make money is when you, the entrepreneur, has made more money.
Yeah.
Especially for PE and VC companies that do minorities.
Yes, absolutely. I mean,
it works when the business is growing, when the EBITDA has expanded.
Yeah.
And that, your 2x or your 3x or 5x still leaves a lot on the table.
Absolutely. I think the risk culture is also, again, that is in question in terms of instruments, etc. And so, the entrepreneurs and then their openness and ability to see the bigger pie is indeed one of the critical things. So we're getting to the end of this excellent conversation. I think I have two more questions for you.
Right.
One is a bit tricky, I have to tell you. So if you lost everything today, what's the first thing you do tomorrow?
I would look at it more positively than I've lost everything. But I believe I understand what you were saying. And I've said many things about what entrepreneurs don't do, what they don't like to do. And that's actually the reason why I set up SAA Capital. So if I lost everything, including SAA Capital, I'd like to come back to actually to try and implement the things that we pontificate about.
Yes.
So that we put our money where our mouth is.
Okay.
This business and this culture runs on lessons. So making your lessons known.
Yes.
Available for the generality. So we can do it in many ways. You said I lost everything, so that means I don't have money. Yes. I don't have...
you have a house, at least. We can live in.
I don't have money, but hopefully my body and my intellect will be there, and I would make that available.
Yes.
And I would be supporting initiatives that give entrepreneurial education.
So you know the type
several lessons learned.
Yeah, you know the type to go and start a farm or something, forget about all these investment space, or that's also possible.
That's possible, but that's not what I would do.
Okay.
When I say this is what I would do, I didn't say I would do that exclusively, because I've lost everything, so I have to go and find bread. But I think that it is possible to do that and still be useful.
Correct.
To show that indeed what you've been preaching still works, and you've got more lessons, and you can share them freely.
No, this is great. So the last question for you, at this stage of your life, what does success truly mean for you?
Wow, success. I'll take it personal, and also personally, it's about fulfillment. It's about what have you achieved, what have you impacted. Okay, but I guess the question is not about me, Stephen. We've talked a lot about our ecosystem.
Yes.
And how the ecosystem don't talk to each other. We have all expressed a lot of frustrations about the fact that we haven't capitalized on the resources available to us. So, for instance, what is the value of pension assets since the last reforms in 2010? Prior to that, we had only SNETs, or what we now call the Basic National Social Security, which is the compulsory. But since the reforms, which started with some difficulties, but right now, the private pension assets is estimated at about 90 billion.
That's in CDs.
In cities.
Yes.
In dollars and in cities, it is significantly higher than the basic national social security, which is run by SNET.
SNET,
And the important development is that that number, the private pension assets under management, appears to double every 5 years.
Oh, wow.
So I helped in doing a baseline study of VC in Ghana. And at the time, we estimated that the pension fund assets was doubling every 5 years. And at the time, it was about $6.4 billion.
Oh, wow.
Translate that to cedis.
Yeah.
And that was about 50 something. This is only up to 2023. Now it's about 90 billion.
Wow, it's huge.
Now, why is this important? It's important because this is so much money that all of us have contributed as pensioners.
Yeah.
And in all mature financial systems, this is how capital, domestic capital is mobilized to finance development, to finance infrastructure.
Absolutely.
To finance manufacturing, to finance the real sector, because that's where growth comes from.
Yes.
And if we are unable to do that, because we haven't learned the art of understanding investing assets, because we don't have empowering regulations that allow these assets to be pulled together and deployed in a way that spurs growth, then we would, for the longest time, always be packing this in government
Treasuries.
assets.
Yes. It doesn't work.
And we know what that means. It means there's very little multiplier.
Yeah, absolutely.
Because government's own funding program may be different from where we need.
The economy to be.
Yes.
Yeah, absolutely.
So for me, if I wake up one day in my life and I see that there are some baby steps being taken, but we're taking domestic capital mobilization
More
very
serious.
serious because there's a pot of
Money there.
and we are all skirting around the important issues and not hitting. So if that gets to be deployed,
Massive opportunity.
I would consider that it would be, if it happens in my lifetime.
Let's make it happen in your lifetime.
It should. Because then PE funds, VC funds have capital.
Yeah.
Even government and public sector organizations have capital.
Yeah.
Because these tend to be long-term in nature.
Yeah.
And of course, once there is expertise in managing this, we will be doing two things. We will be driving and achieving impact. We will be sparing growth, creating more jobs, hopefully, because as businesses get established. So, ecosystem building,
Yeah.
domestic capital mobilization, particularly using domestic
Local resources.
pension funds and pension assets that is growing phenomenally.
Yeah.
And of course, that would require that this ecosystem is knowledgeable, is trained, and have all the safeguards so that we don't open ourselves to the Maxwells of the other world.
I agree. I've got a bonus question for you. Bonus question. What's your message to young people today? And that will be the last question.
It's simple, because I've been young before.
Yeah, sure.
And I would look at what we did when I was young. When I was young, a few years ago, when I started work in a bank, it was okay for a young graduate, perhaps even with a good job, to go to work in taxi and trotro. Now they will go in Uber, which is great. It was okay for young people to add value to themselves and be patient because they are investing in themselves. And when they do that, they would hopefully reap the benefits of the investments. A few years into my work, I found that the situation was changing, and that the young people had a lot more ambition, which is great, but they were ambitions layered on getting rich by mostly foul means, but let me say, to their credit, fair or foul means.
Yes.
I think that young people have to learn to understand that it's a process. And yes, you would find young people who are very wealthy and have started businesses, which is what we all hope we do. They are applying their knowledge and skills, and technology is there to help them. So, I mean, I finished university. I started working in a bank for about 3 years. I had never touched a computer before.
Yes.
And when in my branch they brought a computer, they were telling tales. our branch manager was a woman, and he just put dust covers on the computers and said she didn't want trouble, and that we should not destroy the computers so that head office would give her trouble.
Hey.
After about 2 or 3 months, the head of IT, NIB, came to visit and found that we had carefully packed the computers and put. He said, "What?" I said, "Madam says
We shouldn't
will
touch it."
destroy it."
Yeah.
Fast forward to now, our phones are more powerful than those computers. So we've got young people have got the tools.
Yes.
They've got the knowledge, they've got the training to direct their energy to innovate, be useful to society, and be useful to themselves. And I would hope that they take more of that, because embedded in that is also the risk that it can be swayed to not so wholesome enterprises.
Yes. No, I hear. Again, Stephen, really appreciate the time we spent with you today. This was Tales of an African CEO, Titans of Investment Ghana series.